In a dramatic turn of events, Canada has pulled the plug on Tesla's access to crucial federal incentives. Nova Scotia and Prince Edward Island have eliminated provincial rebates for Tesla vehicles, marking a significant shift in the country's green transportation initiatives. Tesla, one of the world's leading names in green technology, is suddenly cut off from millions in Canadian government support. This shift represents a complex interplay of power, politics, and industry dynamics. Under new Prime Minister Mark Carney, Canada is tightening electric vehicle subsidies. The Transport Ministry has suspended their Zero-Emission Vehicle Incentive Program, ZEV, citing depleted funds. The program, which offered up to $5,000 in rebates for approved electric vehicles, now has only $72 million remaining as we enter 2025. Tesla, having relied heavily on these incentives, faces significant challenges. Major automotive competitors are positioned to capitalize on Tesla's potential setback. What was once a strong partnership between Tesla and Canada has hit serious roadblocks. The implications extend beyond Tesla's immediate interests. This development could reshape the North American electric vehicle market. The policy change signals a broader shift in how governments approach green energy transition and their relationships with industry leaders. These changes mirror similar tensions in other global markets, particularly in regions experiencing significant economic and political transitions. The repercussions of Canada's decision could significantly impact electric vehicle adoption and international trade relations across North America. Stay tuned as this situation continues to develop, with potential far-reaching effects on the future of electric mobility. In a stunning development shaking the Canadian automotive industry, Tesla's aggressive sales tactics have led to a nationwide suspension of electric vehicle subsidies. Tesla sold 8,700 vehicles through just 4 dealerships in a single weekend, roughly one car every 30 seconds. This sales surge triggered subsidy requests totaling $43 million, draining resources that could have supported 16,000 additional vehicles. The federal government responded by freezing the entire incentive program, dealing a blow to Tesla's Canadian sales strategy. Tim Roos, president of the Canadian Automobile Dealers Association, has criticized this decision, noting the industry's substantial investments in electric vehicle infrastructure now face uncertainty due to the suspension. Canada's Prime Minister Mark Carney is actively responding to international trade challenges. Following President Trump's implementation of 25% tariffs on automobile imports to the United States, Carney has introduced retaliatory measures to protect Canadian manufacturing interests. The Auto Parts Manufacturers Association has raised concerns about subsidies primarily benefiting imported Tesla vehicles, particularly from China. They're advocating for supporting local production and supply chains. This situation highlights the balance between promoting clean energy initiatives and protecting domestic industrial interests. The suspension of the EV program, combined with trade tensions between the US and Canada, creates a perfect storm that could reshape North American automotive partnerships. Industry analysts suggest this could mark a turning point in Canada's approach to electric vehicle incentives, potentially leading to stricter oversight and emphasis on domestic production. The immediate impact is being felt across dealerships nationwide, with electric vehicle sales expected to slow significantly. In a dramatic shift shaking the North American automotive industry, Tesla faces a major regulatory controversy in Canada, with significant implications for electric vehicle adoption nationwide. Canadian officials suspended Tesla from federal EV incentive programs over concerns about subsidy fund depletion and questionable practices. This suspension has increased Tesla vehicle prices by $5,000, making clean transportation less accessible for Canadian families. This isn't just about dollars and cents, says automotive analyst James Morrison. It's about trust and whether the government truly supports the transition to green vehicles. The Tesla controversy represents a broader crisis in North America's automotive sector, amplified by former President Trump's 25% tariff on vehicles imported into the United States. Trump aimed to bring auto manufacturing back to American soil and protect U.S. jobs. However, this has disrupted the integrated North American automotive supply chain, triggering a strong response from Canadian authorities. Mark Carney responded swiftly. Beyond Tesla's exclusion from support programs, he called the American tariffs a direct attack and called an emergency meeting with key ministers, escalating the economic dispute into a political conflict. The effects are threatening established trade relationships and manufacturing partnerships. Trump's plan to increase U.S. vehicle production has created challenges for American auto giants and international partners. Industry experts warn this disruption could increase consumer costs and slow electric vehicle adoption across North America. The situation mirrors supply chain challenges in other regions, particularly near Russia. We're watching a fundamental restructuring of North American automotive manufacturing, explains Dr. Sarah Chen, an automotive industry economist. The question isn't just about Tesla, it's about the future of integrated North American auto production. In today's automotive landscape, global supply chains face unprecedented challenges. Our analysis reveals how companies like Ford, GM, and Tesla are navigating through international trade tensions. A single vehicle today contains parts from Mexico, Canada, and various Asian countries, with components crossing borders multiple times before final assembly. With the looming threat of 25% tariffs, this ecosystem faces severe disruption. Industry experts are sounding alarm bells. Even American manufacturers, whom these policies allegedly aim to protect, find themselves in the crosshairs. The ripple effects could trigger layoffs, profit declines, or production relocations. Tesla stands particularly vulnerable. Despite being a symbol of American technological prowess, the company heavily relies on international suppliers, Chinese lithium for batteries, Canadian aluminum, and Taiwanese microchips. Should these imports face heavy taxation, Tesla's production costs could skyrocket, potentially pricing their vehicles beyond reach. Canadian authorities recently excluded Tesla from their EV support program, a clear message about trade relations. The context is significant. For decades, Canada and the U.S. built their automotive industries together under NAFTA, then USMCA. In 2019, 85% of Canadian manufactured vehicles were sold in the U.S. Similar scenarios played out before. When Trump imposed steel and aluminum tariffs in 2018, Canada, China, and the EU responded with retaliatory measures. The automotive industry represents a critical test case for North American economic cooperation, and current tensions threaten decades of integrated manufacturing. As this situation unfolds, the stakes extend beyond immediate financial impacts. We're witnessing a potential restructuring of global automotive supply chains, with implications for consumers, workers, and international trade relationships. In what analysts call a potential watershed moment for North American manufacturing, escalating trade tensions could force major automakers to reconsider their production strategies. Industry experts warn that uncertainty in trade policies might trigger an unprecedented shift in automotive manufacturing away from the United States. The stakes are high, with previous trade conflicts having cost the U.S. economy $230 billion. The automotive sector, employing over 3 million Americans, stands at a critical crossroads. What we're seeing is unprecedented uncertainty in the market, says Dr. James Morton, chief economist at Global Trade Analytics. Automakers need stable, long-term trade policies to plan future investments, whether it's building new facilities or launching electric vehicle programs. Several American manufacturers are considering relocating their electric vehicle production to Europe or Asia, where regulatory environments appear more predictable. This potential exodus raises serious concerns about U.S. manufacturing jobs. The ripple effects extend beyond factory floors. Car dealerships, parts suppliers, and the entire development chain face significant risks. But perhaps the most concerning aspect isn't purely economic. We're witnessing the erosion of decades-long partnerships, explains Sarah Chen, international trade relations expert. When trade becomes a weapon, it's not politicians who suffer. It's working families, small businesses, and communities who depend on stable markets. The current situation poses a crucial question. Are we heading toward extreme economic nationalism, or can international leaders find common ground before the damage becomes irreversible? Decisions made in the coming months won't just reshape the automotive industry. They could rewrite the rules of global trade entirely. In related developments, Tesla's challenges in Canada, which began in 2019, with a controversial market strategy. Tesla's strategy to access Canadian federal subsidies has come under intense scrutiny. The American electric vehicle giant has engineered what some call a questionable workaround of government incentive programs, raising concerns about taxpayer money use. Tesla introduced a stripped-down Model 3 variant priced at $44,999, just $1 under the federal subsidy threshold. This basic model offers a limited range of 114 kilometers, significantly less than standard Tesla vehicles. Tesla's subsidy applications in Canada surged from 300 to 5,800 in just weeks, raising red flags among officials and experts. This appears to be a calculated manipulation of the system, says automotive analyst James Morrison. While technically legal, it undermines these incentives' purpose. Critics argue that offering a car with such limited range defeats the purpose of electric vehicle adoption. A 114-kilometer range isn't practical for most Canadian drivers, notes consumer advocate Sarah Thompson. The controversy highlights a debate about corporate responsibility and government oversight. While Tesla has shown innovation in the electric vehicle market, their aggressive pursuit of subsidies questions the appropriate use of public funds. We're seeing a company that's already a market leader potentially taking advantage of programs designed to help mainstream adoption of electric vehicles, explains policy researcher Dr. Robert Chen. The development comes as manufacturers grapple with changing regulations and market demands. Industry observers suggest this could lead to stricter oversight of subsidy programs and more rigorous requirements for qualifying vehicles. Canadian officials are reviewing their subsidy criteria, potentially leading to significant changes in electric vehicle incentives distribution. The outcome could impact both Tesla's operations in Canada and the broader electric vehicle market. This situation demonstrates that the transition to sustainable transportation requires not just technical compliance with regulations, but also adherence to environmental initiatives' spirit. Tesla's electric dream hits speed bumps. Market analysis reveals concerning trends. In a dramatic turn of events, Tesla, the electric vehicle giant once considered untouchable, is facing significant headwinds in both Canadian and American markets. While not dependent on government support for survival, Tesla has been aggressively tapping into Canadian subsidies at levels raising eyebrows among industry observers. Recent market data shows Tesla's stock experiencing a roller coaster ride. After a 27% surge on December 25th, share values remain 50% below their peak December levels. This isn't merely market volatility, it's symptomatic of deeper structural challenges. The Canadian subsidy suspension triggered a 5% stock plunge, but that was just the opening act. When Trump announced new tariffs on April 2nd, Tesla's shares nosedived an additional 18%, bottoming out at $233 per share. Investors worry about rising costs, potential retaliatory measures, and growing instability in the automotive sector. Delivery numbers tell an equally concerning story. In 2024, Tesla delivered 1,190,000 vehicles, approximately 20,000 fewer than the previous year. For a brand built on explosive growth, any decline signals potential trouble, especially amid intensifying competition. The U.S. market presents worrying indicators. January sales dropped 11%, with Models 3, X, and S showing double-digit losses. Even Tesla's core product line is showing signs of weakness, suggesting the company's market dominance might be losing its charge. This situation mirrors broader challenges in the automotive industry, where trade tensions and shifting regulations are creating uncertainties. Tesla's aggressive subsidy utilization strategy might prompt regulators to reconsider the entire subsidy structure, potentially reshaping the electric vehicle market in North America. As markets react to these developments, industry experts are monitoring Tesla's response to these mounting challenges. The company's ability to navigate these turbulent waters will likely determine not just its own future, but the trajectory of electric vehicle adoption across the continent. In today's analysis, we're examining Tesla's current market position, which faces increasing complexity. While the Cybertruck and Model Y launches provided some relief, these innovations haven't fully countered declining sales. The company faces a significant challenge: maintaining market leadership amid rising competition. The implications extend beyond numbers. Tesla's stock performance, historically supported by strong investor confidence, could face pressure if the company doesn't stabilize soon. This mirrors what happened in the northern Black Sea region's industrial sector, where market leaders struggled during rapid change periods. These challenges reflect broader automotive industry trends, particularly in Canadian markets. The removal of EV subsidies in Nova Scotia and Prince Edward Island has created obstacles for Tesla's North American strategy. Combined with U.S. tariffs, these factors create concerns for the company's future. Can Tesla lead the electric vehicle revolution again, or are we witnessing its decline? The answer depends on how they handle these challenges, especially regarding government policies and market dynamics. This situation resembles patterns in other industries where market leaders faced decisive moments. The parallel with the former Soviet Republic's automotive sector is notable, where market conditions changed rapidly due to external pressures. We invite you to share your thoughts on whether Tesla can maintain its industry leadership. Subscribe for updates on this developing situation. We'll continue tracking these market developments in our next report. The stakes are high for Tesla, and the coming months will be crucial in determining their position in the electric vehicle revolution. We'll continue monitoring this situation closely.